Hey, what's up you guys? This is Junior Trader, and in this video we are taking a look at Tesla stock options analysis. So let's see where the traders are putting their money, how is the options data looking like, and also I'll provide my opinion together with those options data that what in my opinion, what type of options based off of the technicals can come into fruition, what type of options may go worthless, what is the tradable range for Tesla in this week as for the options, right? So I'll provide all of that opinion in this video. And also, guys, I want to let you know none of this is any financial advice and it's only for education purposes. Now, if you can go and check out this video of mine on Tesla that I did. This is on Friday I did after the market closed. It's still valid for this week because I talked about what we are looking for going into this week here. Check this video out on Tesla and that will give you a head start already on the technicals. I'll still provide high level technicals in this video, but if you want to know much more in detail, you need to check this video out here. Also, guys, if you are interested in following along my dividend investing journey and the portfolio that I'm building, public facing portfolio based off of the dividends, I just did a video on week 9 P&L profit and loss portfolio updates. You can check out those videos here. Also subscribe here if you are interested. You can find the link to this channel in the description of this video as well. All right, let's get back here. And so what is the options data telling us? Well, green are the calls, red are the puts, black is the last trading day closing price. Now you can see right off the chart that calls are just a lot, right? There's just so many calls sitting over here and they are overshadowing all the puts, right? Now from the technicals perspective though, yes, overall structure on Tesla is still bullish, but I just want to highlight a couple of areas to watch, right? And as I said, check that video out on my channel, the in-depth technical analysis video. But just want to have you keep a couple of areas in mind. So if you're aware about, I talked about this rebound, if it comes $240 above, we can get to all the way to $252. You can see we got that range on the intraday. Now, the thing from here is that only much more upside can come on Tesla if we get above 252 and 77 cents. That's the first leg up. The second possibility is that if we continue, if we come lower, find support at 20 hours moving average, or even find support at 250, and then starts to make our way higher, then we have to first take out again 246 to get up and up higher. Otherwise, yeah, structure is still bullish. I don't expect any trouble on Tesla as long as we continue to stay above 200 hours moving average. That could also provide it a possibility of almost double bottom. Now, why I'm providing this little bit of technicals is because this will play a role in the options, because if price does a pullback, that leaves us less days now to cover the range up on the top. That will affect how much calls can go, right? So we will put like the baseline case, like all the possible worst case that could happen, what is the tradable safe range for the options or even for technicals that we would be looking at, right? And accordingly, I'll tell you what type of options are worth it, what type of options are worthless. And just so you know, this is a good supply zone as well right now, because this is where the previous ongoing upgoing intraday structure was broken. So this supply zone would still react, right? So this is where you have to keep this area in mind as well, 270. All right, let's jump into the options data. So let's talk about the calls first. 250 spike is there, 275 and $300. So 250 is very close, guys. Doesn't really matter at this point. Let's talk about the $270 calls. So let's go back here, and where's 275, and that puts us right up here above the supply zone, recently formed supply zone, right? And yeah, so this is where it's a little bit of a problem. When I say a problem, not in a bad sense, but a problem in the sense that Tesla would have to take out this huge supply candle. Now, these supply candles are just not eaten away just like that, okay? The price, I do expect, even if it continues higher, I would expect price a little bit slow down in this supply zone. I do expect some sell-off happens here. Now, 275 is only possible if by Tuesday Tesla is still closing above 265 or around this area. If not to even Wednesday, I would say, even if until Wednesday Tesla can close strong here without any sell-off wicks, right? Then there's a possibility of 275. Otherwise, no. And then talking about $300 calls, guys, stay away from it. I don't think it's gonna, at least I don't think this week it's going to come into play. Even though Tesla is doing what, $18 range almost, right? So Tesla would have to go every day up and up, but $300 calls, guys, that's a little bit stretching. I don't think that's a possibility because that is also another psychological level here of that strong resistance. So we have some strong resistance at, like, first of all 265, then we have at 277, and then 300 as well. So in this week, I don't think 300 is a possibility because there are a lot more other areas of supply zone that Tesla has to first win over. All right, so $300 calls, no. 275 likely, but what is the safest calls range to trade, right? So I would say the safest range on Tesla would be until this supply zone, that is around $270 or so. So even, like, put it this level, 265 area, I would say. So from 265 is the top line calls, safely tradable. And if we start to close up here strong, then to a little bit push it higher, $277 is also a possibility. That's what my take is with the calls. But yeah, 300 will go worthless. 275 is possible, but it's still risky. Anything below that most likely is playable. It will make money as long as Tesla continues to stay in this uptrend on the intraday, as long as we don't lose these pivots, as long as we stay above 20 hours moving average, especially above 240. If we start to lose 240, likelihood of playing the calls even then above 252 will start to simmer down. All right, so just keep that in mind. Now, talking about the puts, how the puts looking like. So we have a spike at 230 and $200. $200 not going to happen. Let me just put it that way very simply and right up front. $200, no. Forget it. That's below even 200 days moving average, and Tesla is not going to fall that much. We also have a 20 days moving average support coming there. So what about the $230 puts, right? What is that? So let's go over here. 230. Interesting. So let's go to the hourly interval. 230 puts are possible, not saying they are not possible. I would still say the likelihood of the puts are still less, especially 230, than the calls that to the upside that we have. 230 puts will only come in play, first of all, if we lose. If Tesla closes a day below $240, it could be Monday or Tuesday, either of the days. If we close below that, yes, then 230 are a possibility. We would have to lose 200 hours moving average as well finally, but likelihood will increase. So $230 puts, I would give it a likelihood 45% right now from where the price action is. If we close below 240 Monday or Tuesday, then 230 puts likelihood will increase to almost 70% in my opinion. Yes, that's a possibility. It all comes down to how we close below the 240 around, right? So that's that. And yes, what is the safe tradable range in my opinion for the puts if those levels break to the downside? So okay, there are two sets of puts tradable ranges. The first one is the range of until 200 hours moving average, and that would be somewhere from here if we lose 20 hours moving average down to maybe 232. All right, and then the next leg would be below if we lose 200 days moving average eventually. Then next leg, again, that would depend how much range it can do, but I would not go anywhere below 200, and that's still stretching quite a lot. I would only go this week, guys, even on the put side, because it's Tesla. Let's say 217, but nothing more than that, because that's where the demand zone is. But the likelihood of this type of downside is quite low in my opinion. Your safer bet on the puts is just most likely until $232 area, nothing more than that. And what about to the upside? And the upside, I already provided you the possible ranges to trade the call. Safer ranges, right, is at least until 265. And then if we push a little bit higher, if we close strong up there, then 207 is definitely likely possibility. I do expect there might be some distribution choppiness coming in Tesla this week, but hey, this being Tesla, it can push through if it has to. So, but those are the levels to watch. And yeah, that's my opinion. And yeah, so yeah, and around 225 is where 20 days moving average would be. That's the next bottom leg of the puts, but likelihood of that happening this week is less, in my opinion, that low. But just again, if because just because of this supply zone and bullish structure, there's more likelihood we might just go choppy and distribution phase this week. And we'll talk about level by level. Intraday trades and swing trades can still be taken, as how we did discuss in the technical video. So you can check that video out here, guys. Right, those plays can still be taken. This is on the options that I'm talking about. What type of options may come to fruition, what might go worthless, right? All right, so that's it for this video, guys. And if you found it helpful, valuable, please hit the like, subscribe, and I'll see you in my next videos, guys. Take care. Bye.